Okay. Whoa, what's that? Anyways, you guys can see my beautiful screen.
Yeah.
You guys can see the screen, right? Okay. I want like I want someone to speak. So for example, if there's a question, somebody has to speak and tell me that there's a question. You feel me? Because I probably won't be looking at the
Okay.
chat. Or actually, I'll look at the chat.
Okay.
All
Oh,
right. This will help. Oh, okay. What? 1 second. Okay. So we're just gonna go through the syllabus to start with. 2020. Oh, 1 second. Let me open this in the note app. How many people do we have? Wow, that's a lot of people. Okay. Anyway, so this is for 2026 and 2025 is also the same syllabus. All right, so we're just gonna look at some stuff. Mm, we're gonna look at the content overview and everything else is basically common sense, right? All right, so let's start. This is nothing. Okay, content overview, the fundamentals of accounting, the difference between bookkeeping and accounting. We'll go through this. This is chapter one, and then there is all this kind of stuff. Should I explain each of this, or should we just leave it? Because like, what's the point in explaining it right now, right? It is the introduction class though, but it's boring to explain all of this. You feel me? Yo, anybody reply? Hmm. Okay, and then we look at what accounting does in measuring profit and loss and normal accounting terms and the accounting equation, right? So the accounting equation is going to be your best friend in your accounting journey. It's all really simple, like the entire subject of accounting is really simple, you know. I I failed the subject back in grade 9, which was like my first year for accounting. And then I got angry because I failed. So then in grade 10 I made a comeback and then I got an A star somehow, right? And now I'm teaching this subject. Very cool. Okay, so we're gonna do chapter one today as well, and we're gonna look at this stuff. All right. Then you have bookkeeping, sources of recording data, that stuff, the double entry system, which is basically that, for example, if I make a transaction, let's just say that I pay one of you money for goods that I bought. Okay. 1 second. What the heck? Okay. I pay money for something that I bought. Now, the double entry here would be that money is leaving my bank, so that will be one side, and money like the amount I'm owing you is decreasing, so that will be another side. Okay, so that's how double entry works. Okay, it's a concept in chapter two. We're going to look at it once we get to chapter two. All right, and then there's business documents, which is basically the very first thing, for example, invoices or something. So when you have a transaction, it first comes in the business documents and all. Then verification of accounting records. So for example, you need to have things like this, okay, because there can be errors in your accounting records, right? Nobody's perfect. Your accountant will make some errors and it definitely will make errors, and that's why you use verification stuff, which is like trial balances, chapter 3. This is very simple, very basic. And then bank reconciliation, it's a bit difficult, but overall everything is really simple. Why? Because it's all connected to the accounting equation, and that's simple on its own. Okay, so that's that. Let's just skip this, right? Or do you want me to explain like each one of these? It's like this is
nah.
no, right? I feel you, bro. All right. So then we have two papers. Paper one is just 35 marks, 35 MCQs, very simple. You're just gonna take like, I don't know, 1 minute per MCQ, less than, and you have 1 hour, which is a lot of time. Okay. So don't worry about time in this, and the questions are pretty much easy, but they test your concept more. Okay. So like you need to understand stuff if you wanna be able to answer MCQs properly. And I got 34 in this paper, like my marks just came out a while ago and I got 34. I was expecting full, but yeah, 34 is not that bad. And then in this, I messed up. Why? Because this has theory, okay? So like there's 100 marks paper, and out of it, maximum 20 marks is theory, which is not so fun, okay? Because theory, I mean, like you're you can lose marks more easily, but the structure, the number stuff, it's quite simple, okay? Theory, I was just lazy, so I didn't want to study it. But I believe in you guys. Each one of you has to get an A star. And then there's assessment objectives. It's just knowledge and understanding. There's not much evaluation, as you can see. It's only 15 marks because it's mostly just your understanding in accounting. In business economics, it's different. You have to yap a lot. In economics, in accounting, once you understand something, that's it. Like, the entire subject is easy for you. Okay. So there's a lot of knowledge. So you need to have knowledge. Knowledge is light. All right. So we move on. Now, subject content, the fundamentals of accounting is basically the basics, okay? Then there's the accounting equation. We're going to cover this today, inshallah, at least as a plan. Wait, yeah, inshallah, we're going to cover this today. And then you have the,
Uh,
what's good?
Somebody can share a scholarship.
Somebody
Like
what?
we can create a contest. You know that
Okay.
if somebody win, can have a scholarship.
What's bro saying? Can somebody help?
You know
I
what is
don't,
a scholarship?
yeah. Oh, you're asking like scholarship with accounting, something like, for example, if you do accounting and then can you get a scholarship in some uni or something?
I don't understand why there are so many Indian in this server.
Indian what?
I'm not racist, but I don't understand why there are so many Indians in this server.
I don't know, bro. I didn't make this server. I'm Pakistani myself. All right.
Because this server is from Cambridge,
Bro, if you have a
and
genuine doubt, just ask.
For
Don't
real, for
interrupt.
you're disturbing.
no, because
Please, please,
listen,
bro, don't
because
interrupt the class day,
I
please.
didn't listen somebody from England, okay? Because the
Well, I don't know. Maybe you can go to
Cambridge is
YouTube and find
England.
someone. But like, I'll be teaching in the same accent. If you like it, you like it. If you don't like it, you don't like it. It's not my fault.
No, 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 it's not a bad thing, but I
Yeah.
don't know why so many people are Indian.
Maybe they're like more locked in about studies. You feel me? So like they want to join stuff like this.
Maybe, maybe, maybe.
Yeah. All right. So then there's the double entry. So we're gonna cover like today we're gonna cover one chapter, and then on Sunday we're gonna cover two chapters, and then Tuesday, what Wednesday, Tuesday, Wednesday, yeah, we're gonna cover two chapters every day. At least that's the plan. All right. So like the first week we'll be covering two chapters, so we'll be going on a quite fast pace, right? All right. Now let me look at what else I planned. Oh no, this wasn't part of the plan. 1 minute. After the syllabus, I want to explain chapter one, but before that, I wanna tell a bit more things. Yeah, the T account format. Okay, I think it's all in chapter one. So this is the textbook I'm gonna be using. Okay, and it's very cool. This is the textbook they gave me in school, and that's why I'm using it because like I only know much about this textbook and not other textbooks. Just give me a minute. Let me open it here.
Okay.
I
But
have the
this is
whole
a real
book.
Discord server of Cambridge? I don't understand.
No, like Cambridge didn't make this server themselves, but people just made it. Okay, and like there's a lot of people, so you could say it's the
Oh,
best
people
server.
made it, the
Yeah,
students?
exactly.
The students made this server?
Yeah, students made it for students. Very cool. All right, so we have section one, chapter one, Introduction to Accounting. We're going to look at these two concepts here, bookkeeping and accounting. So they're different, but they're same. All right, bookkeeping is, let's just say you have a small shop, you're like, I don't know, a 10-year-old, and you open a small shop, and let's just say it's I don't know, lemonade stall, right? Yeah, many people do that stuff. So at the end of the day you have to calculate you have to like write down the number of sales you made, let's just say $100 and stuff. So that is bookkeeping, the normal, the basic, just writing stuff, whatever you make, whatever you lose, that's bookkeeping. Okay, you could say the smallest business transactions, which is the smallest record which affects the business. One second, all right? The detailed recording of all the financial transactions. Now, you see, this is all theory part, and I won't really explain much of this, okay? Because first of all, it's boring to explain, and then secondly, you guys can just read the textbook and you can understand it, okay? So bookkeeping was basically the normal hisab kitab, if you understand Urdu or Hindi, which is basically, like your normal day-to-day normal stuff, yeah? But accounting, this is the fun part. This is what we're gonna do. So this is when you calculate your profits and when you make, when you compare with other businesses, when you do ratios and when you do the big guy stuff. So like for this, you need an accountant, you need to study, you need to know accounting. But for this, anybody can do this, okay? Like literally anybody can do it. You just have to know how to read and write. Okay. Next thing we have is the statement of financial position. What is that? It's literally what it sounds like, is the statement of the financial position of a business, right? How does it how do you know where your business is standing? You basically compare these two things, assets, liabilities, and then you get your capital, what the business owns and what's owing to it, its assets and its liabilities. So does any of you know what assets and liabilities are? Yeah, balance sheet, exactly. So who's going to tell me what's an asset and what's a liability? Come on, guys, joldi joldi.
Hello, hello.
Yeah, faster, bro. All right. Assets are the items the business owns, okay, and liabilities are items the business owes. What exactly does this mean, right? So let's just say that I started a business and I have a machine. I don't know, whatever machine it is, some machine, yeah. And I'm owning this. Why? Because I bought it with my own money. So I own this machine, right? It's an asset, okay. And let's say I borrowed money from Ahmed. Is he still here? Ahmed is gone. Uh, I borrowed money from Ahmed and I have to pay him back. I have to pay him back. I owe him money, right? It's not my money. Since I have to pay him back, it's a liability for me. Let's just say this is some money and I borrowed it from somebody, so I have to pay him back, and that's why it's a liability. Why? Because I don't own this. I owe this. Okay? So it's a liability. Very simple, very easy. Bank overdraft. Yeah, yeah, yeah. Right. So the term financial statements is used as a collective name for income statement and statement of financial position. Now these are two statements used in the, it's in accounting when you're doing the big guy stuff, okay? And one of them is the statement of financial position, which literally shows you the financial position of your business using assets and liabilities, all right? And the second one is your income statement. So here you basically, it's literally as what it sounds like. You take your income and you make a statement. Wow. So you have your income and you subtract all costs and expenses and then you get your profit. So it's pretty much very simple, right? Everything is very simple, very easy subject. All right, so define the term bookkeeping. Can somebody tell me this? It doesn't have to be in perfect words. It can be anything, whatever you understood, like
It's
just to see what you understand. I said that
it's
bookkeeping was
it's,
the
it's
basic normal recording of every single thing that happens. So for example, if somebody gives you money, somebody buys a good or whatever, and it's like even small businesses to keep this because at the end of the day they need to know how much they're earning and everything, right? So what did you guys understand from this?
yeah, it's not that easy, but it's because it's that, so it's easy.
Say what now?
Like it's not that easy, but it's because it's the starting point, so that's why I'm saying
Yeah,
it
all
is.
right, like okay, but you understand this much? If you understand this much you'll
Yeah.
understand the rest, like trust me, bro. Inshallah, I'll
Okay.
explain it nicely.
Okay.
So far did you understand bookkeeping?
Yeah, nah, this one too is
All right, so tell me what bookkeeping is and tell me what accounting is and tell me the difference between them. Anybody, not you, not just you.
me. Okay, like bookkeeping, like
Yeah.
in bookkeeping, we record everyday transactions.
Okay, perfect.
Then the accounting, we are now taking the transaction that was recorded by the bookkeepers.
Exactly. So what exactly do we do in accounting?
Like
What?
accounting, we use the information to make decision making.
Okay.
Yeah,
So
either see if
do
we are
you know
making
the name
profit
of
or
any
losses.
financial statements? Do you know about any financial statements which we just discussed right now? We discussed two.
What?
We discussed two financial statements, right? Can you name them?
I didn't hear you. That.
We discussed two financial statements, right? Right now.
I didn't hear you that.
Oh, that's sad. Well, so this was statement
Oh,
of financial position and income statement, yeah? They create
okay,
financial statements like income statement. All right, yes, exactly. That's the
okay.
purpose of accounting. Oh, and anybody, if like the stream lags or something, let me know, okay? All right. Then we have two reasons why it's necessary to prepare financial
I
statements at
think
regular
your
intervals.
stream.
It's
I can't
frozen.
see your stream.
Okay, well, you guys should have said
Yeah,
this sooner.
because
1 minute. Let me reshare. All right, you see it now?
Yeah, let me check. Yeah.
Okay, so that's that. Second. Okay. Is it okay now? Like, anytime the screen goes weird, just tell me, okay? Two reasons why it's
Yeah.
necessary to prepare financial statements, because you have to measure the progress of the business. So, like, if you make a profit, if you make a loss, if you're, let's just say you don't have any record of your business, okay, and you're making a loss for like the past 10 years, eventually you'll go broke and you'll be like, oh, what, where did all my money go? So that's why you need to, make financial statements and know where your business is standing, okay? Does that make
Okay.
sense? And this is
Yeah.
basically the answer to this part. All right. State what is included in the term financial statement. So financial statements has income statement and statement of financial position. Very simple. Now here we get to the fun part, or you could say the
Oh
most
yeah.
important part of the subject. All right, we have assets, liabilities, and capital. Assets we already discussed, something we own. For example, machinery, cash, whatever. So like if you have a machine in your business, it's an asset. If you have cash in your business, it's your own cash, it's an asset. Okay. Oh my God, this is not working.
Okay.
Okay. And then liabilities is something you owe, for example, owing to others, okay, such as
Okay.
borrowing some loan from the bank. It's going to be a liability. What is capital? Does anybody know what capital is?
Like
That would be
capital.
liability.
Okay. Let me try.
Guys, I want you all to participate as well. There's
Capital.
like there's like only one person speaking, and then there's three others, and then one guy is just defend himself. Wow, it lagged. Is it still lagging?
Nah, for me it's not.
No, it's not lagging.
All right, bet. Whoa, what? Somebody just joined and left. This is sad, bro. Capital equals asset minus liability. Okay, but like by definition, okay. So capital is the total resource provided by the owner, and what represents the business owes the user, owner, whatever. All right. What do we get from this?
Okay.
Capital is the amount you invest into the business. Say if I have $20,000 right now, and I'm like you, I want to make some money, and I invest these 20,000 to start a business. This 20,000 will be my capital. Okay. Why?
Yeah.
1 second. And represents what the business owes the owner. Why is it saying business owes the owner? This is basically that if I invest into the business has to pay me back. That's the concept. That's the concept that they're using here, and that's why they're saying that the business owes the owner. So if I invest $20,000 of mine into the business has to pay that to me back one day. So like, say I'm closing the business, I'll get my $20,000 back. Does that make sense?
Yes.
Pretty cool, right? Okay. So capital is the resources provided by the owner, the total resources. So when you start a business, when a person decides to start a business, he will have to provide the necessary funds. This is maybe monetary, but sometimes it can be other things. So for example, if I have a car and I want to start a transport business, so I can put my car into my business as well, and that would also be counted as capital. And if I have money and I'm starting, I don't know, money exchange, then that will also be counted as capital. Okay.
Okay.
All
Okay.
right. Once the business is formed, capital introduced, the business has the money. Okay, this we already discussed assets, we already discussed liabilities. Anything provided for a business by the owner represents capital. This is not necessarily the form of money, it can be a machine, it can be a building, it can be whatever you have. So like whenever you invest something into your business, it's capital, okay? Because you're taking it from your own money and you're giving it to the business, that's gonna be called capital. All right. And there's types of businesses as well. There's sole trader and there's partnerships. Sole trader is one person, like one businessman, okay? So the early chapters is about sole traders, and then the later chapters specifically focus on other firms, other types of firms, okay? So for example, we have all of this is about sole traders, okay? Even this. And then over here we go to partnerships, we go to manufacturing accounts for manufacturing business, and we go to limited companies. Okay, so these are the other three types of businesses that we have. But sole trader, if you understand sole trader, you understand everything else. Okay, and if you understand the accounting equation, you understand sole trader. Very simple. All right, now let's just look at the elements of the accounting equation. There's assets, capital, liabilities. Okay, and it's of course a formula: assets equal to capital plus liabilities. Now, 1 second. Now, this will always be the case. And why is it the case? Why is it this way? Asset is something you own, right? And capital is something you invest, and liabilities is something you owe. Now, if I start a business, okay, and I put my $20,000 machine into the business, how much are my assets?
Sorry?
If I started a business and I put $20,000 of machinery into the business, what's my capital and what's my asset?
20
My assets.
20,000.
Okay, my capital is 20,000.
You put 20,000, right?
Yeah.
Yeah, then
How much is my
capital
capital and how much
20,000.
is my assets?
Then
Are my
why?
assets and capital the
Can you
same?
repeat the question, please?
Okay, my bad, bro. I
Can
think I'll
you
make
repeat the
it
question?
more clear. All right, so I have second. Whoa, whoa. All right, so I start a business, okay,
Can you
and
write?
this is me. I have money. I have 20K, and I put it into a business. Now this 20K is not the form of money. This 20K is a machine, okay. Let's just say it's my
Mhm.
car. This is my car. Ooh, choo, choo, choo. Okay, and I put it into the business. What's my capital and what's my assets? This machine is worth 20,000. Are my assets and my capital the same? They are the
What?
same, and
What?
I have no liabilities, right? Okay. So
Yeah.
my capital
Okay.
is 20,000 because that's the amount I invested, and my assets are 20,000 because that's something the business owns, right? That's something I own as a businessman. All right. Yes, and say I borrow some money from this guy, a lot of likes, and I borrow some money from him. Let's just say $10,000. I take it from him, and now I put it into the business again. How much are my assets and how much is my capital? How much are my total assets and how much is my total capital?
Okay. So your liability is 10K, right?
All right, but like my assets, what's the total of my assets?
So if you want to find the
I had
number
20,000
of
first, and
assets,
then I added 10,000 to the business.
yeah.
I have a total of $30,000 of assets now, right? 20,000 is in the form of a machine,
Okay.
and 10,000 is in the form of a, yes, 10,000 is in the form of cash. And my capital is not 10,000, bro. My capital is still gonna be 20,000.
Yeah.
Second.
Because that's your
Yeah.
equity.
And let's just see this. It's 20,000 assets. Sorry, 20,000 machine plus 10,000 for my loan. This is my total assets. My total capital, the amount I invested personally into the business is also 20,000, and the amount I borrowed from people is 10,000. So do you see it? It's equal, right? Assets equals to capital plus liabilities. Does that make sense now?
Okay. Yeah.
All right, starts up.
I don't know others, but for
Yeah.
me,
All right, perfect. No, bro, there's no kinda. You have to understand the entire thing. I'll explain it again, should I?
I don't know others, maybe.
Yeah, I'm
But
asking them.
for me,
All right, good. Maybe it's my handwriting that makes it more confusing. All right, you understand it? Thanks, bro, thanks. All right. So now if I tell you that I have $40,000 of assets and $20,000 of liabilities, Find me the capital.
So assets
I'll write
minus
the accounting
liabilities.
equation. 1 minute, bro. You already know a lot of stuff. I want the people who are new to this to try it, okay? So assets equals to
Okay.
liabilities plus capital. All right, capital is 20,000. How did we find that out? We just use algebra, yeah? 40,000 is equals to 20,000 plus x, and then you change it and you get capital 20,000. So what do we understand from this? We know that if you know any two elements, you can easily calculate the third element using normal algebra, okay? Now I explained using this example of borrowing and stuff, this line, all right? So this equation illustrates that the assets of a business, the amount you own in a business, it can be a liability. Your assets can be something you owe. For example, like if you borrow money from this guy is the liability and this money is the asset. Okay. So when you record a liability, you're
Okay.
gonna record person X, and when you record the asset, you're gonna record $10,000. $10,000. All right.
Okay. Yeah.
The assets, one second, the assets are always equal to liabilities and capital. All right. And yeah, I think you don't, I mean, like, let's just read this as well, right? The assets represent how the resources are used by the business, and the liabilities and capital resources represent where these resources came from, okay? So the more the assets in your business, the more cool it is, right? But let's just say I have $1 million of assets, but I have like $10 million of liabilities. That's not so cool. What's cool is to have a lot of capital, okay? So the larger your capital, the better it is. So capital would be something like assets minus liabilities. When you have more assets than your capital, when you have more assets than your liabilities, your capital is greater. And you should always have more assets than your liabilities, bro. All right, let's have a look at, oh, that's a big example. And that's such a long chapter. Set up a business, opened a business bank account, and paid in 20,000 as capital. So she paid her own money, okay? And this is in the form of money and it's capital. Why? Because she invested into the business, okay? The business purchased premises. Is this capital or not?
Sorry.
Is this premises part of capital or not?
Business purchased. This one's it's a what? Was said what? It's a what?
Is this premises part of capital or not? This premises purchased for 15,000.
No, no,
I want
no, it's
every
not.
one of you to answer. Each and every one of you in the chat.
No, it's not.
All right, I got your answer. Premises is assets. Okay. Yeah, premises is assets, but I'm asking you if this is part of capital. The business purchased premises and paid by check. Here, the business, Lena put 20,000 in the business. It's capital. Okay, very nice. We understand this part. Is this premises capital or not?
No,
All right, why is it not capital?
because you are purchasing it. You are
Yeah, you're
taking
purchasing
it.
it.
You
Who's
you have to
purchasing
pay
it? The
check.
business is purchasing it. Is Lena
Yeah.
investing any more money into the business? She is not. She already invested 20,000, and from this 20,000, we spent 15,000. Okay, so there is no additional
Okay.
investment being made into the business. It's just the business money being put to use. Okay, so this will be an
Okay.
asset, and this is also an asset, and it's also increasing your capital. The business purchased goods on credit. What does this on credit mean? Does anybody know?
Like isn't it you have to pay it for later?
Exactly. So let's just say I buy goods from you, but I'm like, you gang, I don't have money right now. I'll pay you tomorrow. Okay. So that's buying goods on credit.
Yeah.
All right. So the business purchases these
Okay.
goods. What happens when it purchases goods? Do the assets increase or decrease? I want someone else to answer this.
Yeah. It's
I want someone else to answer this.
okay. Okay.
The business purchased goods for 3,000. Do the assets increase or decrease? Assets increase. Okay. And what about the liabilities? Okay, that makes sense. But what about liabilities?
Me or
what happens to the liabilities? Okay, like do the liabilities increase or decrease based on this? On credit means buying now and paying later. Okay, yes, the liabilities increase. So assets are also increasing, liabilities also increasing. Does this have any effect on capital? Any effect on capital, yes or no? No, okay. Why?
Did I answer it
Because
or
does everybody understand why? Why there is no effect on capital? Because assets and liabilities are both increasing by the same amount. So there is no difference, no effect on capital. Exactly. All right. The business, now the fourth transaction, the business sold goods at cost price of 1,000 on credit. Does this increase liabilities or decrease liabilities? And like just tell me the effect of assets and liabilities, the effect on assets and liabilities by this transaction, by number four. The effect of number four, on assets and liabilities. The business sold goods at cost price of 1,000 on credit. What happens to the assets? What happens to the liabilities? Wow, you're a genius. Okay, let's have a look at the question. The business sold goods. Okay, sold goods. Say I have $1 million of goods. I sold them. My total goods are decreasing. So assets here decrease. The next thing is the cost price of 1,000 on credit. What happens on credit? This is basically that the person bought it right now, but they will pay later. Okay, so we didn't receive any cash yet. Our assets decreased, but we didn't get any cash. Instead, we will receive your instead we will receive money from this guy, whoever bought from on credit. Okay, no, nothing happens. No effect on assets, no effect on liabilities, bro. Because assets decrease when you sell goods, and assets increase because you're about to receive money from this guy. We own this $1,000 that someone else has. Okay, so let's just say that I borrowed money from you, and I told you that I'll pay it to you back tomorrow. So this money that's in my wallet right now, this let's just say $20, it's in my wallet right now, but you will get it tomorrow. So you can say that this is your money. Okay, you own this money. This is you. This is you. You own this money. This $20 is yours, but it's with me right now. I'll give it to you tomorrow, sure. So it's your money, it's an asset, okay? Right now, our assets decrease when we sell goods, and then again, assets increase because we sold them on credit. We will get the money later, all right? And if we did not sell it on
okay?
credit, say we sold it for 1,000, again, our assets will increase. Why? Because we got money. That's if you sold it right on cost. Normally, you get a profit or something. All right. And then there is this explanation answer of this same thing, right? So we can also go through that. January 1, we put bank 20,000. So our assets of which is bank increased by 20,000 and our capital also increased by 20,000. Why? Because we invested this money on our own, okay? She opened a business bank account and paid in $20,000 of her own. Then to January, we buy premises. What happens to our bank balance? It decreases. Bank balance decreases to 5,000, and then we have bank as 5,000, and we have $15,000 as our premises. So again, our total assets are $20,000, and our total capital is still $20,000, and there is no effect on liabilities because we are not owing anybody anything. Okay.
Okay.
Then we have 3 January, we have $15,000 premises, we have $3,000 inventory. Where did this inventory come from? We bought $3,000 purchased goods and it's going to be your inventory. Okay, and we have 5,000 in the bank still. Why did the bank balance not decrease? It's because we said we told the person that we'll pay them later. Okay, so like you kind of took a loan. It's a liability now. You have trade payables. Trade payables is the amount you have to pay to someone because you bought goods. All right, that's 3,000. That's a liability. Okay. So your trade payables increase by 3,000, your bank balance stays the same, and your inventory also increases by 3,000. And you can see that there's no effect on capital. Why no effect on capital? because your liability increased and your assets increased. Both of them increased, so capital no change. Very cool, right? Yeah, creditors, trade payables, you can say both. All right, and then for January, we still have 15,000 as our premises, and we have 1,000 as our trade receivable. This 1,000 is the guy we sold to, okay? So you sold goods to someone, and they were like, "Gang, I'll pay you later," and you were like, "Sure, but just don't forget it." So this guy will pay you later, and that's why it's an asset, trade receivable. You will receive this money from this guy who you did trade with, all right? And your bank still has 5,000. Your inventory reduced by 1,000. Before you had like $3,000 of inventory, and you sold $1,000 of inventory. So now you have only $2,000 of inventory. And again, this has no effect on capital. So you can see that only the amount you invested first is affecting the capital, right? Most transactions will
Okay.
not directly affect the capital, all right? The assets are equal to the capital at the first date. Why? You can just see it. Like you invest $20,000, your capital is $20,000. Very simple, right? Then the money in the bank has decreased. This is just the explanation. We already did this, right? Okay, fill in the missing figures in the following table. This is common algebra. Let's just assets equal to capital plus liabilities, and then you can just solve this, and then you can just solve this. Just add these two, you get your assets, and you just bring this here, you subtract this, and then you get your liabilities. So this is again algebra, very simple. Now we come to the statement of financial position. This is basically your assets, liabilities, and you have to find your capital in this. The accounting equation may be shown in the form of a statement of financial position. Can somebody tell me what the accounting equation is?
Accounting project, assets equal liabilities plus capital.
Okay, is he correct, everybody? Star and grill. Is he correct? Is he right? Are you guys alive? Okay. So the final, the what do you call it? The accounting equation is assets equal to capital plus liabilities, and every time a change is made to any of these assets, liabilities, or capital, a change will be made to the statement of financial position, because the statement of financial position is made using this. All right. So let's just have a look at this one directly. Statement of financial position at 4 January, the dress shop at 4 January. This is the case, okay? So basically we're making a statement of financial position for everything that happened here, but we are only taking into account the last part. So like we're gonna have this and this. We won't like for example, we will only take 2,000 as inventory. We won't take 3,000 and then subtract 1,000. Our final inventory is 2,000, so we'll take that. I think I'm making it a bit complicated, but inshallah it's gonna be simple once you understand, okay? So we have 15,000 premises, we bought this, and we have 5,000 bank. We had like 20,000 bank, right, at the start, but we don't show that in the financial position. Why? We show this at the last date, okay? So like the last day of the year, let's just say 31st December, you're gonna make your financial position at that date. You're gonna make your balance sheet at that date. So that's why you'll only take the last balances. At the start, we had $20,000 in the bank, but why are we showing only 5,000? Because at 4th January, we only had $5,000, okay? And we had 15,000 of last day of the financial year. Yes, sir. Yes, sir. Very smart.
Yes, sir. Yes. What?
Feedback for I'm just saying yes, bro, because like this guy just said last day. Okay, very cool. Well, then
Oh,
we
my
have
bad.
inventory 2,000. Normally we had inventory 1,000, but since we sold it to somebody and sold it on credit, we have this and this. So instead of writing inventory 3,000, you're gonna write whatever the case was on the last day. On the last day, we had inventory 2,000 and we had trade receivables 1,000. Where did this come from? This was because of the guy we sold the goods to on credit. All right. Is everything making sense?
Yeah, yes.
Okay. Yeah, actually, 1 second, right? Just give me a minute. This is good. I'm a man now. What do you mean? You're a new man. Okay, well, anyway. Um, give two examples, include excluding those, and walk through. Okay, yeah, this is perfect. I want Star to answer this, and Reed, you will answer this one.
Okay, guys, I'll be back in a minute.
All right, Star, answer one. Yo, Star, I'm waiting for your answer of question one. What's an asset? What's a liability? Just give me an example. And Rail, you answer question number two. Assets, inventory, cash at bank. Okay, very smart. What about liability? Bank overdraft, creditors. Okay, see trade payables, because so far we've only used that phase. Trade payables. All right, and let's just wait for this guy's answer. All right, a supplier bought goods from the other person. Supplier like me bought goods from the other person. No, buying goods does not make it a trade payable. Buying goods and saying that I'll pay you later is a trade payable. Okay, so that you have not paid them yet, but you will pay them. All right, so that's why they're a liability. They're a trade payable. You have to pay them later. And trade receivable is a credit customer. A credit customer means somebody who bought the goods and he will pay you later. You sold goods and they bought goods. Okay, but they didn't pay yet. That's what makes them different from normal customers. Okay, so you have normal customers and you have credit customers. Credit customers are people who buy the good and they go like, I'll pay you later, like that. Okay, so they just make excuses. They don't give money easily. Bad people. But when you buy on credit, people will buy more. That's why we sell on credit. So, the customer doesn't run away to some other person and he buys from you. Okay, everything okay. The totals must always agree. If they do not, you know that there is an error. All right. So every time you're making a balance sheet and the totals don't agree, you're making an error. The totals have to agree. What do you mean by the totals? This is what we mean by the totals: assets and liabilities. And then you have your capital. So assets must always be equal to liabilities plus capital. If it's not, then there is an error. Okay. Trade payables are suppliers we bought from on credit. Trade receivable customers we sold to. We sold to on credit. All right. Okay, the statement of financial position or presented in a horizontal format. You can also present it in a vertical format. All right. A vertical format would be something like tuck, 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 and then you have something like assets over here, and then you have your liabilities, and then you have your capital, and then this must total to this. Okay, but like the horizontal format, it's easier to understand. All right, now show that every single transaction involves a change to the assets and liabilities or to the capital. Also sometimes a transaction can affect the capital, so both always bought goods on credit to your customer, like you sold to them and they bought goods from you. Yes, yes, yes. It's not always bought. So for example, if you're talking about trade payables, then those are people who you bought goods from and you will pay to them later. If you're talking about trade receivable, they bought goods from you and they will pay you later. But it's always pay later. That's why it's a liability or an asset. Because if it was pay now, then it would simply affect your bank, right? Your bank or cash. Does that make sense? All right, very cool. Give me rep, give me rep. Anyway, all right. It's necessary to prepare a statement of financial position after every transaction. Now, you see how here they have four transactions in total, and after every transaction, they showed the assets, liabilities, and capital. Every transaction, the total assets, the total liabilities, the total capital, the total liabilities. But if you're an actual business and say you have like 10,000 transactions in a year, then you can't simply have 10,000 different financial statements, right? That's why we only make financial statements at the year end. Okay. Uh, 1 second. Okay, the similar financial position is prepared only periodically, which is you could say yearly. All right, and many transactions take place in each hour of working day. Day-to-day business transactions are recorded using double entry bookkeeping. Now, what's double entry bookkeeping? That is chapter 2, and we will discuss that tomorrow, inshallah. Okay, double entry. This is usually done on the last day of the year as part of financial statements. What do you mean? Oh yeah, a statement of financial position is prepared at the last day of the financial year. Why? I already explained. Because like if you're preparing if you're preparing the balance sheet during the year, then you're gonna have different balances in like every single day, right? So you need to prepare it at the year end so you can compare it with the last year and last to last year like that. Yeah, very cool. Okay, and yeah, 12 months plus 1 year. No, it doesn't have to be 1 January and to 31st December. Sometimes it's 1 March to 31st April. That's a financial year mostly, but some businesses also use January. And like if you see any question and it's not using January, don't be angry. And if you see any question that's using not using April, March, don't be angry at that as well, because it doesn't really matter. It just has to be a 12-month gap. It just has to be one whole year. Okay, now revision bookkeeping is detailed recording. Detailed recording as in like every single thing that happens, okay, even the basic stuff of all financial transactions. And accounting, the fun part, the hard part, uses these bookkeeping records to prepare financial statements. What are financial statements? You have your balance sheet and you have your income statement, okay? Why is it necessary to prepare financial statements? Because you need to show the profit or loss and the financial position. Why do we need to know the financial position of my business? Like, what do I care? For real. Because, like, it's easier to understand. Most people I know always mess up the dates. So, like, you should just, doesn't matter a lot, but, like, it's okay. You'll get used to it. Anyway, tell me, why do we need to know the financial position of my business? Like, what do I care, bro? My business is living, let it live. You're making me angry. Well, so we need to know the financial position of your business to compare it with your own business of previous years or to compare it with other businesses, right? So if you're saying that I am a business and I have my competitor over here, so I have to check who's stronger, right? So that's why I need my financial position, and I will somehow want to sneak into his accounting records into his computer and get his financial position, and then I'll be like, ho ho ho, I'm superior. You don't do that. But yeah, that's one case. You just compare it with your own business, but previous years, okay? But you do it. They're very easy, bro. Like the entire accounting is too easy. Okay. The accounting equation shows that assets are always equal to capital plus liabilities. And if this is not happening, then man, you're doing some crazy big mistake. Okay, you're probably forgetting to put some zeros in the end. So like 20,000, you probably wrote 20. Yeah. All right. The statement of financial position shows the assets, liabilities, and capital as well on a certain date. Certain date, mostly like 99% of the time is gonna be the year end. Okay. So yeah, which task is performed by a bookkeeper? I want start to answer this. A trader provided. I want me to answer this, and then I want not Rishit to answer this. I'm in class. I can't hear you. Go to the closest ear doctor. If you want anything this time. Uh, Okay, I'm waiting for your answer, guys. All right.
Were you saying something to me?
Yeah, I was saying that you just answer this one. I mean, it's your choice.
First one. The
Oh,
first
oh
one.
wait, it's actually too long. It's never mind. No need to. All right.
The second one.
No, no, no. It's too long. Like it's not
Which
that
question?
important, right?
Which
It's okay.
which
It's okay.
question?
Leave it. Leave it. Leave it. Leave it. Boy. Is he still here?
Guys, it's easy. Maths, just use our
Yeah,
calculator.
exactly. It's easy. Accounting is too easy, man. Accounting is fun. Accounting is like you don't even need to study to get any start in accounting. You just understand it once and that's all. Bro, I'm waiting for your answer. If you don't want to answer, just tell me. I'll answer it myself. That's not the point. I'm just trying to test that you guys understood stuff or not. You said
Which
B.
question?
Okay. Well, I didn't know that. Which task is performed analyzing? No, this is the accounting. Why? Because the trading result, let's just say that you're a small supermarket or you're a lemonade stand. You don't need to analyze your trading results. Like you don't even know what that is, right? And then entering transactions in the ledger, yes, this is something very simple. It's simply like saying that I have $20,000 in my bank account and then I bought a building and now I have $10,000. So like that's entering transactions in a ledger. That's just how simple it is. Preparing year-end financial statements, you don't need this. This is an accountant's job, and this is also an accountant's job because this is a financial advisor kind of thing, right? So no, 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 and yes, correct. A trader provided the following information: calculate the value of the assets. So this is an asset. One second. This is an asset. This is an asset. What is this? This is an asset. This is an asset. This is a liability. This is an asset. This is an asset. What's trade payables? Thanks. Well, like, no, I'm too lazy to open a calculator and actually check that. Okay, so this is a liability. Don't say it's supplies we owe or something, because like right now we're talking about assets and liabilities. So we just add this, and you get the answer of question number A. And then you add this and this, and you get answer for part B. And then you just take the assets, subtract the liabilities, and you get your capital. Very simple, right?
Oh, Avril, I think you miscalculated the part. It is 276,180.
Oh.
276,280.
Okay, so you checked it, right? You just have to know what's an asset and what's not an asset. In this case, only the loan is a liability and only the trade payable is a liability. Everything else is an asset. Why? Because this is a premises, you own them. This is your own inventory, you own it, you will sell it to people. This is trade receivables. People will pay this money to you. You own the money. You just don't have it yet. Office fixtures and fittings, this is also something you own. Loan from bank, you have to pay it back to the bank, so you owe this to the bank. That's why it's a liability. Cash at bank, this is your own cash. It's at bank, okay, but it's your own money, so it's again an asset. Motor vehicles, this is your own car, so it's again an asset. All right. And then calculating the capital, you just do some common sense stuff. What is a statement of financial position? A statement of financial position: assets, liabilities on a certain date. Yes, that is it. Calculation of the amount. Oh, yeah, B is the correct answer here, right? Everything owed and owed. Summary of money paid to industry. What's answer three? पढ़ना तो फिर मोबाइल से कंप्यूटर से उधर जाके ज्वाइन कर लो। नहीं यार, ज्वाइन कर क्या? फिर यहाँ पे बात नहीं करो। पर फिर कैसे से पढ़ूंगा? एग्जैक्टली, तो वहाँ से क्लास ज्वाइन करो जैसे लोग पढ़ने वैसे पढ़ो। नहीं पढ़ना तो। Okay, so I think B is the correct answer, right? I trust you. Okay, it was just my instinct, and I'm too lazy to like look at the other options. Money paid to and received. This is cash book. A list of everything owned by and owed to. Okay, yeah, this is something fun. Okay, in MCQs, the way they phrase things plays a like huge role. Okay, owned by, this is an asset. Okay, owed to, what is this? An asset or a liability? You know why the answer is not C? Because both of these are assets. Owed to a business. This is an example of owed to a business is trade receivables. Does that make sense? So in MCQs, they mostly ask you this kind of stuff, right? Assets and liabilities is correct. If you say everything owned by and owed by a business, then this is also correct. But since this is owed to a business, which represents an asset, which is an asset by definition, something like that, That's why the answer is not C, because the statement of financial position has both assets and liabilities, but this option only talks about assets. All right, does that make sense? 4-2, yes sir. Thank you, Hadi bhai. Okay, a business had a lot of money in its bank account. The transactions took place. How much was there in the bank after these transactions? Okay, so when we buy goods, what happens to our bank account? The bank balance reduces, but there is a condition here, it's on credit. We did not pay for the goods yet. We just bought them and we told the guy we'll pay them later. So does this have any effect on the bank balance? It does not. Sold goods on credit. We sold the goods. The goods are out of our business. The person was supposed to pay to us, but she was like, "Yo, okay, I'll pay you later." So we still did not receive any money in the bank account. The bank balance is still the same. Affects the bank? It does not affect the bank. We had a loan and we repaid it by check, by bank. This reduces the bank by 5,000, yes. In accounting, when you write brackets, you represent a reduction. So for example, we have 9420. If you write 9420 here and then you write 5,000 in brackets, it shows that you're doing 9420 minus 5,000. And that's how you get it. Very simple. Okay, that makes sense to everybody. And this is, if anybody of you loves studying something, you can do it. It's all very simple though. Should we do it right now? I want to show you guys T account. Where did they introduce T account? Okay, it's tomorrow. Not Rashid will explain T accounts and chapter 2 and chapter 3. Good luck, bro. That's a lot. Like they have a lot of pages, but it's very simple. Like for trial balance, I can literally give you one mnemonic, and it will solve the entire chapter. If you just use pearls, this being the debit side and this being the credit side. But this is, we'll do this tomorrow because like right now, a new student would not even know what debit and credit is, right? Because so far we've only introduced assets, liabilities, and capital. Okay. Any questions? Feedback? I want I want you guys to tell me how the class went and how I can improve and did you understand everything? It was really cool. Bro, you joined in like I don't know the last few minutes. I don't know when you joined. But yeah, cool. Thanks. But like, did you understand stuff? Just because Hadi said cool, everybody's saying cool. This is the influence that Hadi has. You understand it? Alright. Well, like you guys already did this part, right? I want somebody who was new to accounting. Is anybody here new to accounting or all of you know accounting? Like absolutely new. I'm new to accounting though. I don't know much accounting. I'm learning. I'm in the revisit syllabus for exam next month. Okay, that's very nice. So like, inshallah, this will help you very much. Okay, and once we get to once we get to, you could say, chapter, I don't know, 10, 11, 12 or something, then I'll give you guys shortcuts and hints and everything. Because if I just drop them right now, nobody might understand it. Alright, so I'll end the class now. Because, yeah, 1 hour done, right? Or did the stream? How was the stream though? Like lagging and stuff, or no?